Okay, guys. Good morning. All right. I want to do a back test. I want to give you guys another back test videos. Okay, so one of my very good mentors or friend rather said he gave his input on these videos. He said I should do more of educating people on what fair value gap is, like the introduction to synthetic pairs. All right, I haven't posted any video yet on synthetic pairs on my Instagram because I do the educational videos on Instagram and I do the strategy videos, the backtesting, the analysis and all of that. I do it here on my YouTube channel. So if you want to learn anything, I'll be posting some stuffs, some educational stuffs on my Instagram. Okay. I'll be posting some educational stuff on my Instagram. So please do well to go to the Instagram page. It may be a snippet, it may be short clip snippet, or it may be reels, right? Short reels. But then, however, it's going to be on my story. It's going to be on my post, not my story. My story will be mainly probably some of the things that we do here. I'll just use it to upload my story there. Okay. So let's dive into it. We have this pair, VIX 51s. All right. So we're about to backtest. I think even this week I'll make another video analysis for what we are to look out for in this week or probably by next week. I don't know when this would play out, but probably by next week. I'll make another video for something here, okay? So please do well to follow me, subscribe, like, and drop your comments, okay? All right, let's go. So this is last week between 9th February to this week, Monday, between 6 to 16th February, okay? I would make a backtest video by the end of this week of what happened this week, okay? Of what we're looking at this week. So I'll be posting it from next week. I'll be posting the backtests from next week, all right? Okay, so let's dive into this. All right. At this point, this is on a daily time frame where we have to pick out our zones, right? We have to mark out our zones. You can see how I pick out these zones and mark them out. I'm doing it fresh and raw here. So you guys have to see everything, okay? So, and yep, I think this is one. Let me just put it in. Okay, so at this point, if you notice, let me box it in first of all. If you notice, market did market was on a downtrend, was on a uptrend initially at this point. Then later, market switched to downtrend. All right. So this is the movement I'm going to show you. This is the movement. The last market has been here going up, creating more higher highs and higher lows, right? So the last low that caused this high here is this low here. This is the low that caused the high. So where market broke structure from, remember I told you guys I always like to use the body, not the wick. For those of you that like to use the wick, is fine. Still, I guess it's still okay. So, but for me, it doesn't really matter what you use, but as long as it's clear to you, okay, just do make sure your whatever you're trading, make sure it's clear to you. All right. So this is our church. Church means change of character. Okay. So I'll just put a trending line here just to let you know what I'm saying. This is trending line. You join one line to another line, then you draw it up, okay? Trending lines are supposed to be one and above, two and above rather. So Once you have two lines in the same trend, you're good to go. All right. So at this point, it was an uptrend. The market switched over to downtrend after it broke character here. And I'll also cater for the downtrend moves. I'll cater for it as well. So you see what I was talking about. So yeah. So it's even looking more simple drawing this move. So at this point, it gave, I don't know what's happening. At this point, it gave a full downtrend, touching the highs, touching the lows, touching the highs. So we're going back to the lows, somewhere around here. Market might mitigate somewhere here, tap on this low before to start looking to tap this high here. So these are points that we could look out for more entries, more TP. If we're in on the trade, fine. But let's see what happened last week, why this came here. All right. So this was where we had our break of structure here for this movement down. We had our break of structure here. We had change in a character here or here. Then we had break of structure. So daily time frame has its other block here. This was the last bullish push before the bearish move. That's what they call order block. I'll talk about it more on my Instagram page. So you guys have to follow up. All right. So this is daily order block. Sorry about that. Yeah, this is daily order block. And if you want to look out for fair value gap, this is a fair value gap, but I wouldn't call this because it has been invalidated. Whenever, if price comes and hits the top of this, then it's invalidated. The order block is invalidated. Same rules applies for same rule applies for fair value gaps. Okay. Sorry, I'm skipping. I'm not used to talking a lot. So, but yeah, but just follow up with me, okay? All right. So on a daily, we accounted for this. So we are looking at this backtest as though we've not seen this week, this particular week here now. We've not seen what's happening on that week. So since this week have not been there, is not there, and we're looking at market has done a lot of this, right? Market has broken this structure too. So if you look, market has also broken, for me, me that is taking body, me that is marking out body, market has broken this structure. So I would likely also be looking at any other block here. So I will pin out this other block as well. This other block. I would pin out this other block as well here, right? As one of my daily order blocks too. To see if markets would respect it, right? I would actually pin it out too. So yeah, so I'll pin it out too. So one of the things you must know, one of the things that you must know about this level of trading or this strategy of trading or pattern of trading is that the market, sorry, I got to stretch. I had to stretch a bit. This is a bit unprofessional, but I'm just trying to keep it real here with you guys, right? All right. So when market does things like this, right, you should know that market is looking for liquidity. And if you're not careful, you will become the liquidity. If you're not careful, you will become the liquidity. All right. So let's go. 4 hours. Now, if you notice, this was the beginning of the week. This is the end of the week of last week. This is where we had our daily order block, and this is the other daily order block as well, right? So 4 hours order block will be somewhere around here too. So remember the rules. Where's that rule? Where is that rule? Where the hell are you? Copy. So this is the rule, okay? Remember this rule that we put here for our checklist. I think I should put this thing here. It's better off here. Yeah. It's better off here. I'll be leaving it here. So remember this rule. One of the rule is that when we put this, if you have been following me for a while, when you have your order block set or fair value gap set and market goes all the way to tap on the high on the top of the order block or this thing without reversing or without giving you, it's already invalidated. So that's like one of your checklists, but it's not written down here. This is just for entry checklist. This is an entry checklist. So please take note. It's not the full total checklist. I'll do a checklist video, how to run down on your checklist video. I'll do that on my Instagram, an educational video on my Instagram. So most educational videos I'll be dropping will be Instagram, while the YouTube will be more of the strategy and the live trading videos, okay? So please take note of these. I'll be doing more posting real soon, all right? So let's keep it going. So at this point, market came all the way to invalidate this other block here for 4 hours and also invalidated the other block for daily. So this is not counted, right? It's not counted. How do we know now that markets will be? So that's how you avoid a loss. This is actually how you avoid a loss. So markets came all the way, went straight without trending. Remember, it's one of the rules. The first break of structure after moving all the way from the low zone here, then took out the break of structure, which became this one, and went straight to the point, the fair value gap or order block zone, right? Went straight to it without trending there. You see, the third one was the trending. If it forms a trending structure, like if we had from here, we had like a trend, sort of, right? That's when you have to wait for a break of structure. But if you don't have like a trend, you just have market do all this push all the way to this point, then the goal is to wait for your first reversal candlestick pattern that shows up. And this is like an evening star, right? This is like an evening star. Or some people can call it is it harami? Yeah, I think it's harami, sort of. So, but this is a reversal candlestick pattern here. So if you notice, it didn't come to this level to retest. It took out these people here, everybody that had their entry here or their what do you call it, or their zones here. A lot of people may have had your fair value gap, your order block here. Maybe you put a pending order or something. This market has just taken you out. You get. If you put a pending order, it will take you out of the market. On one strike, took your entry and took your stop loss. If you still had your stop loss way above here, it still took it. So you understand. So it's just one thing that you have to be careful with. And I don't always put pending orders because I might turn out to be the liquidity. That has actually happened to me a lot. So I prefer, my own pattern of trading is I prefer to watch the market until it gives me or until it falls under my rules, right? So this market came smoothly to this point. If you notice, in 4 hours, there's a fair value gap here, which is within the daily. I hope I get this right. Okay. So which is within the daily order block. Within the daily order block, there's a fair value gap there. Let me change the color. Remember, I told you guys I used to use I used to use the pink color for fair value gap and the green for order block. So there's a fair value gap here, and also there's another block for 4 hours here, but it didn't get the order block of the 4 hours, but it did tap in on the fair value gap. Okay, it tapped in and closed down. So if you wanted to take this trade, you would have actually been on an early entry from here if you wanted to take the trade. You get. So my rule is I have to see this one, 2 to 3 rejections. So I wouldn't take this. This is the first time it came there. A little bit of rejection. This is the main rejection. and this is the final rejection. This is like the main rejection, close a sell, final tapping again once more on the other block of the daily in 4 hours time frame and closed here. So this would have, if I'm trading from 4 hours, this would have been my entry and my stop would have been way above the area. So this ultimately gave a 1:4, which is above, still above our target 1:3. Our target is always 1:3, 1:2.5. But sometimes if you wanted to allow your TP open, you could be moving your stops. Make sure you're moving your stop. When market moves, break even. When market moves, when you see the first reversal and and the first correction and impulse, then you can move your stop above your entry or below your entry, depending on your traded direction, right? So you can move your entry, your stop loss here to stop profit. You see this one push again, you move your stop loss. You see this one push again, you move your stop. So at intervals, you can also be having more entries. If you want to stack up, you can also be having more entries after the first one, but make sure your entries are like corresponding to after after a correction move, then the impulse is when you enter. Okay, make sure it's always on the impulse. Don't enter on the correction because you don't know how far markets could correct. All right, so on 4 hours, this would have been my entry, but let's check 1 hour. Let's see what we have on 1 hour. Okay. On 1 hour, I think on 1 hour, this would have also been my entry. What's wrong with this thing? Is this VIX 50? No, this 51 is. Yes. So what's going on? Okay. So on 1 hour, let's see what we have here. On 1 hour, market came as far as this. Do we have any other block here before the break? Wait. I didn't cater for the break of the 4 hours. Hold on. And again, mind you, something I didn't remember to do is here you have to also cater for your range, trading range. Okay, do not also forget this. It is very, very important. You have to cater for your range, your daily trading range. Yep. Yeah. Do not forget this. I've made a lot of mistake most times, and just this little thing now that you see here might be one thing that will make you lose trades because you can't tell the view of where market is going when you mistake the direction of markets. It's crazy, man. It's really, really crazy. You might the stop loss that is going to hit, your stop loss that is going to hit will be massive, man. So, but yeah, make sure you have your trading range. It's always very important to have your trading range. Always, always very important. Have your trading range and yeah. So on 1 hour, okay, on 4 hours, we had our break of structure here. This was where we had our break of structure. You could call it here or you can call it here because I would also want to put it here because it's the last low before the high, before this high move. Okay, it's the last low. So you can put your break of structure here or you can put it here. Oh shit. You can put it here if you want to. It's still gonna work. Yeah, it's still gonna work. However, so if you break it down to 1 hour, what is this? What's going on, man? What is going on? I need to save this thing. Okay, guys, just give me a minute. I think the site is having some glitch. Let me refresh the site. All right, let's go back. VIX 1S, 51S. Okay, where we at? Open. Okay, yeah, good. So we're back. All right, so we had our break of structure here and here. So we're looking at price happening on the areas where we have where the fair value gap areas or the break of the order block areas in 1 hour before the break of structure. So if we're looking at this break of structure and market came all the way to here, to this low point of this 4 hours, which are the break of structures before which break of structure do we have before, or the other block before the which other blocks of fair value gap do we have before the break of structure? Yes, that's what I want to say. Forgive my words are really difficult to come out. Okay, so that's it. So we have a fair value gap here. There's a fair value gap on 1 hour here. Just at the break of structure point, there's a fair value gap here, right? There's a little fair value gap point here. Yep, yeah. I can tag it as 1 hour. So if you look closely, it was tapped. Yeah, it was tapped in. Yeah, but then remember the rule is we need 2 to 3 um, rejection confirmations. Okay, so we had the first rejection, first market candlestick market when the candlestick on price when they rejected, came back again, second one rejected. You see the full rejection, and this was like the third one. So if you even break this down to like 15 minutes, you see like a shoulder head shoulder kind of, because it looks more like a shoulder head shoulder here. So on 1 hour, that was what we had. I don't think we have anything there. No, we don't. So this was where the break of structure happened here, and it was also at the point of the fair value gap on 1 hour. So ultimately, I would still say this is a good point of entry. Yeah, I would still say this is a good point of entry because this full candle now cleared off all these lows here. And if you notice on 1 hour, we had a trend there. You get, it was trending to the location on 1 hour. This was the first time it left here, came back to the point and left again. But then while going, it trended. This is a break. This is a break here. This is a break. If I copy this, this is also another break. You get, so it trended there. There was a trend, it went, broke off the trend, created a low, broke off, created a low, broke off. So ultimately, this third rule, once there's a trending structure to the order block zone or the fair value gap zone, wait for a break of structure to your traded direction. So this created a low here. Why doing all this first rejection, second rejection, it created a low here. So this candle that cleared off this low was your perfect break of structure. And that's actually where the entry is on the 4 hours. So I think this is actually a good one. So, but then on the 1 hour, entry would have been smaller, like somewhere here. You get, entry would have been like somewhere around here. I'm sorry, your stop loss would have been somewhere around here on 1 hour. So this would have been a very good trade. If you caught this trade, this would have been a bombshell for you. It did a 1:5. This happened on 1 o'clock on a Wednesday, 1 o'clock last week. So it did 1:5, gave you all this push down, push down, push down, push down, push down. You would have been in all this correction, what do you call it? Correction and impulse. You would have moved your stop to below this point, right? Then it did a correction. Although this is your distance, so I wouldn't advise moving your stop here yet until market is far from you ahead. Then you can break even. And once market does this correction and impulse, move your stop above here, break even here, and another entry here. Once market comes again, you notice this impulse again, move your stop here, and after the impulse, the confirmation for the impulse, then market does this again, come back, does something like this, move your stop here. That's how you trail stop. I'll talk about trailing stop. It helps you accumulate more. So if you had like a 1:3, 1:4, you would notice that by the time you start trailing your stop and adding more entries, what will happen is you would have gathered up to 1:6, 1:7 in that still small space of your 1:2, 1:3. All right. So it helps you also follow the market in case market wants to reverse. So when you see something like this as well, right, and push back, you put your stop and you add your entries. You can add entries anywhere around here, and until market gets to the full TP. All right. So this was a successful trade for last week, and that is it. So please follow my next video. I'm going to do what we are to expect this week in the next video. Okay. This is VIX 51s. Do well to subscribe. I'm still your guy, Josh FX Pro. Okay. So do well to subscribe. Hit the like button. Drop your comment on what you think about the strategy and all of that. Let me know what you think. And let's go. If you have some questions, you can ask. And also, if you need to chat me up on maybe the strategy, drop me your comments on DM me on my Instagram. I'm always on the Instagram and I'll reply you. Okay. DM me, send me a request. I'll add you up and talk. Okay. So have a good day. And I hope this helped you to remember the strategy and all of that. So bye bye for now.